Good morning, everyone, and welcome to another live trading webinar. As usual, let's start with the risk. And simply states that this content is for general information only and is not intended to provide trading or investment advice or any kind of personal recommendations. Please make sure to refer to your weekly fundamental analysis on the podcast section at Admirals website. The link is on the YouTube. You can find it easily there for those who participate through the YouTube. But for those who join via Zoom, of course, in order to register to the website, you have also access and you find out where is the podcast. So if you have any difficulties to find, let me know. Now, why it's important? Because we built up the trading ideas for the week, and today the Australian CPI number came out less than was expected. Therefore, Australian dollar can expect it to experience some weakness, and our plan is still intact. So let's go through the comments. Ruben, good morning, Theo. Good morning, Ruben. Larry said, good morning, Theo. Good morning, my friend Larry. Ebrahim Essa, good morning, Theo. Good morning, everyone. Interesting day ahead. I hope everyone has a super day. Absolutely. Maria Julia said, good morning to all, and let's see what the market has for us today. Absolutely. Rumen, how are you doing, my friend? Good morning. Margaret, good morning, everyone. Special good morning to you, Theo. Thank you so much, Margaret. Good morning to you as well. Mr. Nick, how are you doing? Good morning, Nick. Radolf, good morning. Good day. I hope you're doing well, my friend. Let's start with the pound US dollar. Going from the weekly chart, we see that we are in this uptrend, right? Price make higher highs and higher lows. Now, we are at this area of possible support. If we go back to the daily chart to find some entries, yesterday we had this nice bullish candle. I was expecting to find a bullish engulfing, but market didn't make this false breakout. After it tapped into this 61.8 zone higher, I'm not in any trade here. So still bullish implications. Euro US dollar, the sell-off slowed down. We can see as well from the candles here. I'll show you. Strong candle, minimal activity, another wave to the downside with less sellers yesterday. So we do expect the market to move a bit higher. Now, remember that the European Central Bank as well as the Fed are both keen to their interest rate for this month, and therefore we don't know which one it's going to be the strongest currency among these two. So based on swing trading and the technical factors as well, I wouldn't be very keen to get into any trade with the US dollar and the euro together. But, so I will take it out of my watch list for now, the euro US dollar. But Australian dollar so far, one more time, CPI expected to drop from 1.3, I think, to 1%, and it dropped to 0.8%. That shows even more weakness. We see that the market sold off early this morning. It moved about 65 pips, if I remember correct, 62 pips. So what I will be looking to find ways to get into the short side. You see, guys, here it was a bearish candle from this trend line downward trend line tactic resistant, and that's the 4-hour chart, but only the traders in who trade Sydney sessions and an Asia session will be able to get into this move, or our friends in Canada they are awake during this time, but not us in Europe. So my bias for today, I will be trying to heavily sell the Aussie. If you want Aussie USD short or Aussie JPY short, Euro Aussie, Pound Aussie short, everything with the Aussie for intraday traders, 5 minutes, 15 minutes, 1 hour chart will make it a good candidate for today. New Zealand US dollar, let's go back to the daily. At this point, really, there is no clarity with the QE. So I'm just expecting, honestly, to see the market make this retracement up to the 61.8 FIB, and from there to see what's going to happen. But saying that, I told you a few days ago that if you are trading this wave, then ideally for you, the 61.8%, it can create some opportunities, but we don't know how strong it's going to be, this market to lift higher. Anyway, the Fed rate decision will come in the next few days, and we have to be ready to deal with a strong US dollar if the currency will follow through the rate hike, and if the Fed will hike the rate. Next, the USD CHF. Strong move to the downside. I'm really expecting the market to go and retrace somewhere to 61.8 or even to 50% FIB. So for now, on the sideline. USD Canadian dollar. Yesterday, I had a buy stop order for a bullish engulfing. It didn't occur. After the close, we saw minimal activity here. So today, again, I will be looking to trade it to the long side. Therefore, I will bring up the MetaTrader. I'll find the USD Canadian dollar, right click, and I find the low of the previous candle. Right click here, alert. So if today the price will take the previous candle's low, I will place a buy stop order above the previous candle high. The reason is this structure here, that the market may develop an inverse head and shoulder reversal pattern. It's reversal because we have a trend. It used to be a downtrend. Market, it's been more than a month. It's in a consolidation phase. A head and shoulder or inverse head and shoulder takes somewhere about 1 to 3 months to complete it. So it's a nice inverse head and shoulder pattern. And we know, or if you don't know, I will tell you now, technical analysis, we know that the prices, it takes more time for the price to go higher, but it takes less time for the price to fall. So again, the inverse head and shoulder pattern takes more time to develop than the head and shoulder pattern. Next, USD JPY. I'm looking for a buy stop order here. I have a pending order above the previous candle high. Why? Because there is this triangle. We have impulse candle, then we have inside, then we have double inside. Double inside, a breakout of a double inside. It's a strong breakout. Now, it can break out to the downside as now or to the upside, either way, but because the daily chart, it's not where I do analysis. I do analysis on the weekly chart, and on the weekly chart, we have this support here, and we have this inside bullish candle. Moving average, I use the 9 and the 10 and the 21-day moving average on the weekly chart only if you want to use them. And I disable them from the daily chart because on the weekly chart, it's more relevant to capture the intermediate trend of the market. And it's something that I'm not interested to look for on the daily chart. On the daily chart, I prefer to have it as clean as possible. I have some moving averages here, and of course the Bollinger Bands, because I want to see some contraction, some fake outs of the Bollinger Bands, etc. But most of the times I disable them. I don't want them to be in front of me. I just want to monitor the price action. So if this, again, this market can be in a transition, there are two things that leave the trader with question marks. First is the break of this higher low here. So the market make higher high, and it retraced 100% the move, and now it pushed backwards to the 61.8% of this D to E. You can see I write it here from D to E, 100% if we use the FIP to 0%. 100% and 0%, for those who don't know, is the way the FIP measured. Here, the 1, it means 100%, and the 0 means 0%. So the retracement or the correction, 61.8, it's up there. And the price maybe start a downtrend from this point onwards. But retail traders, we don't know if this leg, it's the beginning of a new downtrend. If we see we need 4 points to draw any trend line, 2 points at least to draw a line, yeah, but to indicate if there is a trend line, we need 1, 2, 3, 4. So far, we can assume that we have 1, 2, 3. That's not enough to initiate any setup. So for me, I go with the weekly chart, execute on the daily. So it's more valid for a buy stop breakout. Next one, pound JPY, little bit mess here, weekly chart. It's at this topping pattern. Better I change the color of this one so we don't get confused. Or maybe this one, it's okay, keep this one. We don't get confused because there are black tails and wicks and black trend lines. So the text, it's good to be on another color. What do we see here? The market is maybe creating a topping pattern, but it looks there is some support from the buyers because the wicks stay at a higher price. Now, I don't trust this type of market here because it doesn't have any, it just paused for a while, right? Now, the best way to trade is to see some red candles follow green candles. And then we understand that, okay, there is a correction occurring in the market and most likely we're going to continue the uptrend. But this topping here after a strong impulse move without some good taking profit and maybe some correction, the market, it looks like it doesn't have that strength to push higher. Also, we are in an overbought area of the RSI, and that indicates that correction may become an overbought area on the weekly chart. It's much stronger than an overbought area on the daily chart, because the weekly chart to become an overbought, it takes too much effort. Therefore, I'm on the sideline. I would like to see a clear higher high, higher low, or lower high and lower low before I enter this market. Australian dollar JPY, of course, I will try to look for some short positions. You see here this candle sold off aggressively during the CPI news, and from that point it rejected any buying activity, left long tails here. So 1 hour, 15 minutes, 5 minutes, maybe it's making ideal to look for shorts. Euro JPY, I was looking for a nice bearish engulfing here, but unfortunately didn't occur. Very strong resistance. As I show you here, there are negative divergences. Price tried to make a new high or equal high, and the momentum indicator failed to make new high. Therefore, it calls reversal divergence, bearish divergence, or negative divergence. So still looking for shorts here. If you are trading any, I will show you another great setup that you can find it on the 4-hour charts mainly, and it's a super powerful breakout strategy with the trend, not against the trend. Please take some notes if you need so. When we spot a strong, let's say, down or sell off on a daily chart, if we go to the 4-hour chart and we monitor the price action during the Asia session, we want a price action during the New York session or the London session to be quite long candle, the body, not I'm not talking about the wicks, I'm talking about the body. So let's see, this candle here started in New York session and completed just before the close of the New York session. So from that point, the next 3-4 hour candles, they were small and trading inside this candle here. A breakout to the downside, continuation breakout, if it's going to occur and we have room for opportunity, most likely it's going to give a nice trade and fast as well. Okay, so we took some trades. I remember previously on the Euro US dollar, when it was a nice downtrend, we took few trades like this, and that's a powerful strategy. Again, you want to see a strong trend on the daily chart or a strong candles on the daily chart, like here, coming from resistance, red candles, and you go on the 4-hour chart, and if you spot during the Asia and Sydney session 2-3 candles traded within the previous New York session candle, that's an indication of a strong breakout to the downside. Because what's the reason behind? Three trading sessions, all the traders were not unable, they didn't agree that the market has to push higher. Therefore, they were just sideways placing the orders, and with the London session, most likely we're going to see an explosion to the downside. Next one, New Zealand JPY. It's a little bit mess here, nothing to comment. Something I would like to get your attention, guys, the CHF JPY, it's at its all-time high. What does it mean? It means that we don't have an indication of the next resistance. What can we do in these occasions? We can draw the fib tool to see the extension, as I told you other time how to find the extension. Right now, it's at the 161.8 fib, and here is the 200%. Again, all-time high. At any point, we're going to see some retracement. I have the first target as the S1 at 61.8 fib from this swing to this swing. And there are negative divergences on the RSI, which is a good indication. RSI was just recently overbought, which it's another good indication of the market correction. And here is a nice setup. yesterday, the market didn't manage to make it higher. Today, the price take the previous day's high, and the ATR, it's 125 pips. It means that if we place this order here for a bearish engulfing, because we have a higher high, if we go for a sell stop below here, and the stop loss, it's going to be about 80 pips. It's well below the ATR, and that's making it a lucrative opportunity. Guys, I hope this makes sense and you understand what I explained here, and I just don't repeat everything to myself. What do you guys think? Palmier, good morning, my friend. How are you doing? Cherry, nice to see you on the webinar. Lunga, good morning, family from South Africa. I hope you're doing great. Jenny or Jenny, good morning, and I apologize if I don't say your name correctly. Roland, how are you doing, my friend? Roland said hello. Rumen, you're doing great. That's fantastic. Or you understand everything. One of the two, yeah. WTI, we are in this uptrend. I want to measure now from the high to the low of this swing to see the extension. Price came exactly at 161.8 FIB extension yesterday. And if you look at the left, it matched nicely with this resistant zone, these 2 weeks. And we can see some retracement. But what I like why I like to use the extension FIB tool is not to initiate necessarily trades if we are not on a strong resistance, but to see if the trend has the sequence. And if a trend has a sequence and all these FIB levels appreciated by traders, it can work really well on the retracement or correction to find some buying opportunities. That's all. So bullish on this one here. Gold, I'm still in this position from the last week. Let's see what's going to happen. I'm still bearish. Yesterday we said that if we trade intraday, we look for buying opportunities. But if we trade swing trading, now there is no opportunity. It was at that resistance here, as you can see, at that R1 resistance. With the gas, nothing. Copper here. What's going on with copper? Yesterday, nice impulse candle. We are approaching this resistance. Again, for swing trading, I don't think right now. Maybe it was an opportunity here, but it wasn't something I took advantage. Silver is following the gold. That R1 resistance. The reason I put the R1 here is because we have this inside resistance here on the left. Platinum. I'm on the sidelines. I will be more keen to sell it rather than to buy it. So yeah, and you see how simple it is to go through many pairs with a trading view, so we don't look left and right. Where are the currencies? And let's read some comments. Okay, we have 4 minutes for the London Open. Larry asked, do you use the day one to analyze the market? Which time frame do you use to execute trade? No, I use the weekly chart to analyze the market, and I use the daily chart to execute the trades. William asked, Theo, I have to admit that I learned again from you. Thank you very much. Really appreciate you, William, and everyone, of course, because you are here and you are learning, and I hope you apply what you learn. Ruben, 5 minutes to market open. Thank you so much for reminding. Hayao, good morning, everyone. Good morning, Hayao, and welcome to the webinar. Ibrahim, DAX, we're going to have a look at the DAX now. I will show you some other, that's the UK 100. It's at this resistance here with a very nice candle printed yesterday, rejecting the resistance. We know that hammer at resistance, it's a tricky candle and act more times like a reversal. And then we have this doji at resistance, which shows that buyers are not that strong. Today, here is my setup for today. On the MetaTrader, I place a sell stop order below the low of the previous candle, stop loss above the high of the previous candle, and I target 3 to 1. That make it a great setup because of the reward to risk. Okay, let's go to DAX 40. We are at this resistance, but market really looks like it wants to break to the upside. And here is the room to move up or down. Let's go to the 5-minute chart. So on the 5-minute chart, a buy stop above this, higher. That's how I would like to play this. And the sell stop, it's a bit tricky. Just going through some time frames. If we go for a sell stop here, let's check where it's on the 5-minute chart. That's 28. Okay, so I say I'll stop below this point here, guys. So this is the setup for today, the way I see the market. I have a buy stop order on the DAX for the London Open. Couple of minutes left. Let's see what's going to happen. Foluso, good morning, bro. Good morning, my friend. So 1 minute left. Going back to the trading view. I spot another opportunity, another trade set up, and that's on the, there are 25 seconds left for the London Open, guys. Here it's the US 30. There is a resistance here. The market already played out this rectangle pattern, and I'm looking to sell on the break of the low of the previous candle, stop loss above the previous candle high, and the risk reward up to the 50 pip, it's more than 3 to 1, and it's making another great opportunity. So London Open, let's see where we're going to get fill in to the downside, maybe. Yep. So I cancel the buy stop order. Let's see if it's going to be a valid breakout. Yes, 10 points already played. If you want to take it out, we have a strong support here. Let's check what's going to happen. $11 points if you had to take profit. I wasn't that fast to close it, so but this time, if it's going to come there, I will be fast to close it. Yes, I'm out of the trade. 11 points. It was a good trade again. Are you guys still in the trade or did you close it? It's not very clear setup, this one, to be honest, because there are some, if I zoom out a little bit, you can see there are some support zones here on the 5-minute chart. And yeah, the price action may be triggered a little bit. So let's hope that if you are still in the trade, to see the 1-minute candle to push a bit lower, so it can give you the opportunity to take your profits as well if you haven't done that yet. But here we are around the support. We sold from there. I took profit somewhere there. Let's see what's going to happen. Ebra, you managed to get 23 points. Awesome. William, I'm out 12 points. Perfect. On 15-minute moving average 200. Perfect. I like your technical setup there. Ruben said also I'm out. Okay, guys, I think we had another good trading day. In the meantime, let me share something with you. Remember that tomorrow the time changed actually, and it's going to be at 2 p.m. UK time. I repeat, 2 p.m. UK time, London time, GMT zone if you prefer. It's going to be the market talk with Vilan Art, exceptional trader. We're going to talk about his trading strategy, and trust me, he's a brilliant trader, and I encourage you. I participate. He interviewed me once for his show, and this time I will be interviewing him. Really, if you're available, join live and you can ask anytime. We're going to be more on technical side and how we trade and profits and all this stuff and losses and all this stuff. Okay, so please make sure you participate. For those who are new and they don't have the link, I will share it on the chat right now. And really, I expect you, if you are around and if you have some free time, to be on this webinar. All right, guys. So that's all from me today. Again, let's see, the DAX is on the 16 points if you're still in the trade. So manage your risk accordingly. I would like to wish to everyone here to have a fantastic day ahead. Happy trading if you're going to trade in the morning and afternoon. And I will see you tomorrow again at the same time. Thank you so much.